Hi everyone, welcome to the first video on this channel. Um, I'm going to be starting a series which is called Market Breakdown, and this is going to be the first episode. And I'm going to be tagging this episode the next Bullrun because basically what I'll be explaining is a breakdown of what is happening in the crypto market using the BTC chart because the BTC is also a correlation of the crypto market capitalization chart itself. So I'm going to be opening both and then I'm going to show you so that you can be able to see and then I'll come back to BTC and then do a full explanation on what it is that is happening in the crypto market. So like I said, I'm going to be moving to I'm going to be moving to BTC right now. Okay, let me start by showing you the market crypto cap. Okay, here is it. So if you look very well, what you're seeing here on what you're seeing here on crypto market capitalization is also what you're going to be seeing on this thing. Is also what you're going to be seeing on BTC market cap itself. So I'm going to be taking it back to BTC market capitalization. So you're going to notice that it's looking exactly the same. It's what's happening on this thing. So uh the So with that explained, I'm going to just be removing some of my tools there and then I'm going to start from scratch and then bring you guys into a full details of what it is that is happening on uh, the crypto market. So I'm going to start from here, which is what happened in the last bull run. I'm going to start from here, technically explaining what happened in the last bull run. So if you look, the market was in a series of higher highs and higher lows, higher highs and higher lows, higher um, higher highs, then um, higher low. Then we came here. We like the market came in to form a big Fibonacci. If you draw a Fibonacci from swing high to swing low, you're going to notice that this is a higher high and down to the higher low. Then before you now continue drying up, then to a higher high. But then if you look closely, you're going to notice that the difference between this high and this high is not very much significant. There where and this actually means that the market was trying to create a double top, and a double top technically signifies a reversal pattern. So after this double top was able to hold, if you after this double top was able to hold, the markets came down below. Now, ideally, because I'm explaining this on the weekly time frame, if you want to trade this, all it is that you should now wait for is a pullback into here, into this zone, and then you can now start selling like that, assuming you were able to know at the time that yes, the bull run was over. Now the thing is, the before before last year, before not last year, before the last bull run, which was around 2020/2021, before the last bull run, crypto markets was not really something you can be able to analyze using technical analysis. Now, I'm not saying you can't analyze it, but I'm saying that there's a like it is much more analyzable. Let me use that word. I don't know if it's a thing, but then I believe you get what I'm trying to say. It's you can now very much analyze the crypto market than you could analyze crypto market as at then, because then there was a lot of manipulation happening in the market as at the time. But now it is very much more predictable because a lot more people interested in the crypto market, and then since the mass human psychology is now involved, this has now allowed the crypto market to be something that you can be able to now analyze and then be able to take advantage of from even from the technical standpoint as well. So the market now started forming a series of um, lower low, lower high, lower low, lower high, lower low. Now, after forming this equal high, which is tallying with this one, technically the market was supposed to come and form another. The market was supposed to come. Let me remove this too so that I can be able to expand my screen back and explain better for you guys. Assuming the market was still in a downtrend, the market was supposed to come and form a lower low here. Now I'm not saying this the bear market is over, and at the same, but then the market is beginning to give a reason why you should become, let me use let me say 50-50 on BTC. Now, if you become 50-50 on BTC and then you're able to position yourself very well, there is a high chance that you'll be able to take advantage of the next bull run early. Now, it might be what the crypto market is trying to print might be bull run itself, and also it might be something you can call um, a recovery phase. Now, what do I mean by recovery phase? Recovery phase is basically a, let's assume you were able to you were part of the people who bought BTC around $50,000 or around $69,000, which is around to, or around that price, or let's say $40,000 or thereabout, before the bear market dipped into where it is. There's a high chance for you that you're going to get a recovery. You're going to get the money you lost into the market, you're going to get a recovered to you from what the chart is trying to print out. There's a chance you're going to get it recovered to you, and then maybe you can just maybe take partials and then hold on for possible bull run. Even like it might not just be recovery phase, it might now extend into a bull run itself. But so now, what do I mean by what the chart is printing? Let me just show you what it is that the crypto market is beginning to print, and then I'll show you how best it is that you can be able to better position yourself and make use of and take advantage of this. So if you if you notice from here, there's a trend line that was in play ever since the last bull run that has been holding the market from going down. If you notice, and now what the market has came to do is that you see the first touch, the second touch. Now we're supposed to get something like a third touch here and maybe continue going down, but the market now break above the trend line. The market didn't only break above the trend line, but the market came back to it pull back into it, and then the market has started moving sideways. Let me not say upward. Let me use the word sideways for now, because until this major zone is broken, before we now see the recovery phase is about to start. And if this major zone breaks, there's a high chance that the market is going to come into $47,000 thereabout. There's a high chance because normally, if you check historically in price action, or if you check historically in if you're someone who trades price action, you're going to notice that the market usually moves from one zone to another zone. What do I mean from one zone? You're going to see that there are a lot of other bars, there are a lot of other zones here, but then this this blue zone are the major ones in the market. These blue ones are the major zones in the market. The reason why is just like, let me use this to explain. If you're from a developing country, you're going to notice that there's something called the national grid, and then there are things known as poles as well. So now this blue bar are just a representation of the national grid on in the market. So now there's no how before we see a good, now the market, the flow of, let me say, power supply can go from a national grid, go to a pole, and then maybe goes back for a certain time, and then maybe because of damage or something. But then there's no how they will just make sure the power supply finds its feet back to the next down to the next or up to the next national grid, so that the flow can be in sync as it's supposed to be. But then, even though it's going to be like that, you're still supposed to manage your risk in trading. So back to what I'm saying. So basically, what I'm saying is, once the market leaves here, this blue bar, it's going to also, the next phase is going to come to is here. Now, how am I able to determine this? You're going to have to learn how to plot your major zones in the market. But this video is not. I'm not going to be covering that in the course of this video. But then if you stick to this channel long enough, in one of the videos I'll be dropping, you'll be able to learn how it is I'm able to do that. So now, if you establish that the market has been able to break this downward trend line and then has been moving sideways, and then the market has been moving sideways. Now, with that being established, I'm going to remove this. I don't like my chart being too rough, so uh I'm going to try my best as much as possible to clean my chart and then continue back again from wherever it is that I stuck. So, with that being said, we there's something that the chart is also giving us, which is also a sign of a bullish momentum, which is which is known to be inverse head and shoulder. And inverse head and shoulder, like a double top, is also a reversal pattern. But then, if you see a inverse head and shoulder pattern, it signifies a move to the upside. It signifies a possible move to the upside. So now we have the head, we have the left shoulder, we have the right shoulder, and then the market has come to break the neckline. And then after breaking the neckline, there is something also in the laws of price action that there is a high chance that the market is going to come to test the neckline before it now continues going up. But then after the market came to test the neckline, it's basically be ranging. But then it's not really looking so much like a range, but it's looking like the market is also trying to print out another chart pattern, which is also a bullish chart pattern. At the same time, the market is printing a bearish chart pattern. That is what I'm saying. The market is actually 50-50 until this um this zone is broken. Now, if you look very well, this is looking like a double top. If you look very well, this is looking like a double bottom. A double bottom signifies a move to the upside. A double top signifies a move to the downside. Now, the rally from here to here now has invalidated this double top, which means since this double top has been invalidated, there's a high chance that this market is going to come break here. If the market breaks here, touches this green bar, there's a high chance we're going to see a pullback. And then from the pullback, if we see a bullish continuation candle, that is when we're not going to start clicking the buy buttons. So if you want to trade it, if your line is if you fall into the aspect of trading, you can now start trading buying from here. But if you're someone that wants to buy Bitcoin itself and hold, that you can also wait for same confirmation. If you get a bullish momentum candle on the daily time frame after a pullback, when this bar has been broken, then you can now say yes, you can now buy some and hold. So basically, that's my projection for the upward movement. Now, uh, I I was thinking of something today, which I would like to chip in before I continue. There's something in the financial system which is that whenever it is that whenever it is like that, if you notice in the last bull run, if you notice in the bull run before the last bull run, you're going to notice that there's something that is common to it, which is that a lot of people won't know when the bull run is coming. Like that is how the financial system is meant to be. A lot of people won't know when the bull run is coming. And the essence of that, not if let's say for instance now, the people who are in power, the people who hold um the uh the much liquidity that goes into the market, whenever it is that they want to make a move into a, let's say, stock market or crypto market or metals or forex, there's something they will make sure the liquidity their liquidity has been priced into the market before a news get released. Most of the time, that's why news trading is not really something that I will advise people to do. So now, what do I mean by this? There's a high chance that it is until this is broken that people will now start looking for an opportunity to be like, okay, some people might even call it fake out, which can also be a fake out, because the market can decide to come into here and then break down below. It's something that the market can decide to do. This can also be a resistance. I'll pull it back. That is why I said until a pullback happen here, and then I see a bullish continuation candle on a daily time frame before I'm now fully convinced that this market is now um despite the rest of the odds that the market has been giving me, despite the rest of the signs that the market has been giving me. It is until I see a confirmation before I'll now be like, okay, this market is now in a bull run and I can go into it, or it is now going into a recovery phase, then I can go into it. So it is going to start from a recovery phase and then move into bull run. So now the reason another reason why I'm saying it's 50-50 is that if you look at this, there's there's double bottom and then there's triple bottom. Yeah, there's double bottom, there's triple bottom, there's double top, there's triple top. Now the markets can decide to still turn back from here, break down below here, pull back into here, and then start selling down to this blue bar. The market can decide to do that because now, if you look very well, it's also looking like a bearish chart pattern. This is one, two, three, which is going to signify triple top if this zone doesn't get broken. So until this zone is broken, before we'll now be like, okay, yes, this market is now has now given us a direction. So I have two criteria because I'm going to be trading this on my broker. I'm not going to be buying and hold. I have two criteria of entry for this. Until I see a breakout out of here, a pullback, and then a daily confirmation candle, then I'll be like, okay, or a 4 hour confirmation candle, if I'm able to draw a counter trend line, then I'll be like, okay, yes, the market is now it has now given me a confirmation for a buy, and then I'll buy from here, and then my take profit is going to be at $47,000 per coin. Or the market can come here, that this one can decide to hold, and then I will get something like this, a breakout here, pull back into here, and then a bearish continuation candle. Then I'll now be like, okay, it's time to start selling. Then I'll sell. First take profit is going to be here for me, and then second take profit at this as around $16,000 per coin. So basically, that's how it is for what's it called, for BTC. Okay, there's something. Sorry, there's something else that I forgot to mention about. Okay, so if you're in my Telegram channel, you're going to notice that I called a buy from around this region, around there, and then it's been playing out. The reason why I called the buy, let me just break it down so I can better understand. The reason why I called the buy is that if you draw a counter trend line from here, or should I say trend lines, or I would prefer to call it the counter trend line because it didn't really have much touch. So if you draw a counter trend line from here and then you come, you're going to see that the market broke it, pulled back into it. The market broke it, pulled back into it, broke it to the upside, pull back into this. Doing this explanation on the weekly time frame. That is why it's not looking like much really happened, and that is why this is looking very close to each other. But then if you do the calculation of this pip count from year to year, you're going to see that it's close to like maybe 3,000 pip. It's going to be close like 3,000 pip because there's the pip count, the calculation of the pip count for BTC and other forex pairs are different actually. So, but if you do the counting from here to here, you're going to see that it's running into around 3,000 people or thereabouts. So that's for that. So I'm going to basically bring back my tools that I removed and show you a pure um, look of what my chart is like, and then you can now be able to see very well. Okay, so this is basically what I'm talking of. This is basically what I'm talking of. Until I see a break above here, a pull back into this blue zone, then I'll start buying. My first TP will be around here, around this green bar, and then I'll hold it till it reaches $47,000 per coin. Or I see if this blue bar is able to reject it, and then we see a bearish move from here to here. Anything that happens from here to here, I won't be interested. You need to understand one thing is, in trading you need to give yourself an edge that helps you to continually make money from the market. So if you're going in and going out of every trade, you're going to you're if before the you might lose everything it is that you have before the market now comes to give you a favorable market condition. So now that I've been able to analyze this, and then I've been able to see that this is the big move that the BTC wants to make next, all I just have to do is to wait, sit on my hands, wait for a break down below here. Let me remove this. I'm coming. It's not really serving any purpose for now. Okay. it's already done its work. I've been able to profit from that. So until I see a break above here, you see I put a possible double top. That's before this move happened. Then a possible double bottom. Now it's looking like a possible triple top and then a possible double bottom. So we can now wait for either this, the strength of this inverse head and shoulder pattern, and this, the strength of this double bottom to hold the market and then break to the upside, pull back, and then continue moving up. Or the market can decide to come, break below here, pull back into this minor zone, and then fall down to around $16,000 per coin. My first level target is going to be around here, around $20,000 per coin, or should I say, yeah, around $20,000 per coin, as you can see here. So either so BTC next move either $47,000 or $16,000, but there's a high chance it's going to $47,000. You're waiting for, I know you're waiting for Bitcoin halving, but then the people that are going to pump liquidity into the market won't give you a chance for you to know when it's going to happen. You just have to position yourself very well and be able to look. You need to be sound fundamentally, and you need to be sound technically so that you can be able to take advantage of what is going to be happening in the market. You're waiting for Bitcoin halving, which is historically something that has been happening. But then if that's the only thing you're waiting for, and then you don't even know how to better understand when the Bitcoin halving is over and like that, you won't know when liquidity start going into the market, and then if liquidity start going into the market, you might end up buying the top again, and then they will start dumping it on you again. So you don't want that for yourself. You need to like be able to technically be able to position yourself for the next move, and then this is my own means of positioning myself for the next move. So that is that for that on this episode of Market Breakdown. I'm going to be releasing another episode very soon. Maybe it's going to be probably a weekly or bi-weekly thing, but there's a high chance it's going to be bi-weekly because my mode of trading is swing. As you can see, the pip count I'm going for, the move I'm going for is usually large move. So it's we probably it's going to be probably bi-weekly thing, but then let's just see how it goes. So cheers, guys. Welcome to the end of today's video. Thanks for sticking to the end of it.